What is actually going to see a lot of capital gains and potential investment returns for people?
I think Singapore's a very interesting market. 2017 saw a lot of collective sales. That's sort of en bloc sales of existing residential units for redevelopment. And we think that's going to fuel the market in 2018. We're expecting positive growth of between 3 and 7% in Singapore. And that's after nearly 4 years of negative growth in that market. So Singapore's an interesting market to watch. And we think the Hong Kong prices will continue to rise into 2018, continuing to defy gravity. And despite the rising interest rates, we're expecting prices in Hong Kong to go up between 5 and 8% on the residential side. Other markets, China, Australia, probably more muted. They saw a very strong 2016s. They've seen things slow down in 2017, and we're expecting that slowdown to continue into 2018.
Right. Now, let's talk about second homes or other capital markets in Asia that might present more capital appreciation opportunities. Nick, we were talking, of course, or we mentioned a second ago, that you see places like Manila and India as potential outperformers. How do you see that happening? What are the drivers there? What are supply and demand dynamics like?
Well, Manila's been a strong performer now for a few years, coming from quite a low base. Capital price is quite low, but really fueled by strong demographics, improving infrastructure, and that really strong BPO market, which is really fueling the local economy. India is a different kettle of fish in many ways. It's been a market that's been very slow in the residential side, although it's seen more strength in the commercial side. But what we've seen is the market's been hit by demonetization, by the introduction of GST, by other hurdles, and we sort of see that India could emerge from some of these challenges in 2018 and start posting some positive growth in some of the major cities across India.
Right. In India, demonetization was an issue, right? But I mean, at the end of the day, you know, big ticket capital purchases like property are not done with cash notes. So once that kerfuffle or once that noise was out of the way, I guess transactions went back to normal. I mean, are purchase and sale agreements being executed and closed at an optimal speed right now, or are things still slowed down because of what happened in the financial markets last year?
Things really did slow down in the residential market. Certainly the first half of 2017, the residential market was very, very slow. What we did start to see is some sort of green shoots of recovery the back end of 2017. It's almost like the market just got wobbled and it's just finding its feet again.